morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market alert for Monday, November 28th. Investors on Wall Street seem to be returning from the Thanksgiving weekend in a buying mood. Futures are pointing to a sharp upturn at the open, on the heels of a solid rally in the equity markets across Asia and Europe. Those gains were prompted by signs that European leaders are making progress in their plans to address the sovereign debt crisis. More on that in a moment. U.S. investors are applauding those developments as well, but they're also reacting to the initial reports on holiday shopping. According to ShopperTrack, sales on Black Friday, the day after Thanksgiving, were 7% higher than last year's levels. The Associated Press estimates that the tally came to $11.4 billion. Meanwhile, IBM, which tracks sales at 500 top web retailers, said online sales jumped more than 24%. Amazon.com was one of the big beneficiaries of the increase. It reported that sales of its Kindle electronic book reader quadrupled from a year earlier.
Turning to Europe, we're seeing strong gains across all the major markets. Frankfurt's DAX index and the CAC 40 in Paris are both jumping nearly 4%. The rally comes after news reports that leaders have agreed on how to leverage the Eurozone Rescue Fund. When finance ministers meet tomorrow, they'll reportedly set new rules for borrowing against the European Financial Stability Facility. Reuters also said that there will be new guidelines for intervening in the Eurozone bond markets and providing credit lines to governments. A separate report said that French and German officials are discussing deeper financial integration among member nations. That could require tougher budget rules for countries that use the euro currency. Meanwhile, the International Monetary Fund denied a report in an Italian newspaper that it would offer up to 600 billion euros in aid to the struggling nation. The yield on Italy's benchmark government bond has been hovering around 7% on concerns that the country will not be able to meet its debt obligations.
Italy will be one of the European nations holding closely watched debt auctions this week. Spain and France will also try to sell government bonds. But first up was Belgium, which hit the top of its planned range this morning. The country sold 2 billion euros of debt, and bids were almost 3 times higher than the supply. The sale was the first test of the Belgian bond market since Standard & Poor's downgraded the country's sovereign debt on Friday. Following that sale and the reports of progress on the sovereign debt crisis, the euro is making up some ground against its major rivals in the currency markets. Right now, it's trading between 133 and 134 to the US dollar. The dollar's relative weakness, along with a heightened appetite for risk among investors, is helping commodities this morning. Crude oil is surging by $3 to nearly $100 a barrel. And gold, which has begun trading more like other commodities and less like a safe haven investment, is rising to around $1,720 an ounce.
A report on new home sales out at 10 a.m. Eastern Time may help shape the U.S. market today. It's expected to show a slight decline last month after a big jump of 5.7% in September. But the highlight of the week on the economic calendar comes Friday, with the release of the November employment report. U.S. employers probably added more than 100,000 jobs to payrolls, following a gain of 80,000 in October. The unemployment rate likely held steady at 9% even. Ahead of the opening bell, financial stocks seem to be leading the way. Citigroup and Morgan Stanley are both jumping 5% in the pre-market, with Bank of America, JP Morgan Chase, and Wells Fargo not far behind. And finally, keep an eye on United Healthcare. The company affirmed its earnings outlook for this fiscal year and predicted revenue in 2012 that was roughly in line with estimates. That's the latest from Weiss Research. We'll be back after the opening bell with all the market-moving action, including a big analyst call on Google.